Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo, not the video, for the 9th of January, 2020. Well, the market keeps climbing, and so does the uncertainty. In the prior video, we talked about uncertainty at the highs, and that was key because we had peace, or at least we had a resolution in the missiles in Iran, the Persian Gulf. We'll keep talking about that because it keeps being headline news, and it keeps adding volatility to our equity markets. And of course, crude oil, which when peace broke out, or at least again, a de-escalation of tensions, crude, which had spiked to the upside, declined just as quickly. But that did so against one of our targets. We'll talk about that and maybe a couple of defense stocks in tonight's video. First, we're looking at the quad index futures grid, starting with the S&P 500. It's at the top left. That's making new highs. Today was an all-time high for the S&P market, joined alongside of it with the Dow mini futures right there, pushing up into 29,000. And the Nasdaq gapped and traded a little bit weaker in the morning session, but nonetheless did peak and close above 9,000 in the Dow mini futures. The one market we're taking a look at outside, we might not talk about it that much, but it's the Russell Futures, Russell 2000 Index. It's the smaller cap stocks. And while the other indices went flat, actually NASDAQ went up, Dow went down, the Russell went lower. So it's kind of clawing back to the 1680 index level. So the weakest of the four is the Russell. The strongest, if you will, there's kind of a lot to look at, might be the NASDAQ, S&P, and of course the Dow. Taking a look at our intermarket grid, money flow is really across the markets. We look at where the money's flowing, mainly into risk on, which is equities and crude oil and some other commodities, or risk off, defensive, protective. That's gold and treasuries. We do have some targets in play. As the equity market keeps creeping higher, the threat of war didn't really, or I guess tensions in the Middle East there, not necessarily war, but tensions, did not do much for the equity market. But, in other words, it didn't really gap too far down. That was a downside overnight gap that was bought right back against 3220 in the futures market. So that gave us really two V-spike trend days in a row. It's a gap down and bullishness throughout the session. The last couple of trading days have been bullish trend days to the upside. That wasn't the case in crude oil. That had an upside target, as we've been mentioning, into 63.50. I'll go through these on the daily chart in just a moment. But that has given a sell swing. So with the de-escalation as of this video on Thursday night, the de-escalation of tensions, crude oil, which spiked to the upside, actually traded down. And that did so in a couple of trend days, really a big decline on Wednesday's session. Bonds, we'll start with bonds over here. They had a rally up off of the 128 index level, that is ZN, that hit the trend line target just shy of 129. So that gave another sell swing or short-term pivot, short-term resistance against the bigger picture. And gold, which had its triangle breakout, traded above, exceeded, like gold, or like crude oil, exceeded the 1560 target, and then traded now down against 1580. It can be helpful to look at these on the daily chart so you get a comparison of the bigger time frame and the bigger perspectives. We still do have gravity spots beneath this, but none or no major levels at these all-time equity highs. So money has flown into, or has flowed into the equity market, also crude oil, but crude has stayed a little bit stagnant or sideways range bound between roughly 55 or 52.50 and 62.50, or ultimately 63. We call that a sell swing up against that target, and that's where the market has traded in the last couple of sessions, down away from resistance. It's not the case in stocks. They keep going higher. And gold, which also broke, right, we had a call or a bullish type of play off of this mega support level in the bond market and in the gold market. Gold actually did break strongly to the upside. Bonds only managed to get that upper falling trend line before falling back against it this last couple of sessions. So gold again is into resistance. And we can take a look at these with, just for fun, if you don't trade futures, we can look at them through the bond market. So TLT and GLD. If you trade those, of course zooming in, levels would include 148, just above this 146.50. And for the TLT, we've been calling out 135 is a support level. And the upper target is, or was, 138. So while money did flow in the equity market, kept flowing, this onset of tensions really led to ultimately new highs in the equity market. And that spiked a little bit in gold, but as the tensions cooled, the stress or the relief or the protection or the defensiveness afforded by the gold market, and bonds for that matter, turned to the downside. And premium or money came out of crude oil. We can look at it in the broader perspective. That's where I prefer to take a look at individual equities and plan out the next session or swing trades. We can also look at stocks like Lockheed Martin. So that did get a boost. Right? Any type of defense stock would typically get a boost on tensions breaking out, or the prospect or threat of war or conflict or missiles or what have you. And it would not do so well on the resolution of those tensions. But let's not get ahead of ourselves. News can happen quickly and will continue happening this weekend and into next week. So we don't quite know the future, but we know that these stocks, these markets, will be affected by positive or negative tensions or news in the Middle East there. So Lockheed Martin did continue the uptrend, did get a triangle breakout, and is trading up. We'll pull to a weekly chart to new all-time highs. And that's just a strong stock getting stronger. That's one of our main strategies about find something strong and expect it to get stronger. If there's an added catalyst, that's even a better thing. That leads to the news type of event or news type of catalyst. Stocks don't always have those, but it can be helpful to positions when they do. So Lockheed Martin is another one. We can also take a look at, well, just randomly Northrop Grumman, NOC, and that also had a break to the upside, that overnight gap. I know we had some bullish activity prior to the strike or prior to the conflicts, and nonetheless, the stock did push up and test or trade into the prior high. That was a good swing trade. That was off of support into resistance, but again, got to count that up to the catalyst in the Middle East. But that's how swing trading typically works. It's from one level to another level, which is typically a prior low or a support-based low, 339, 340 per share, and that targets or trades a swing, that's what a swing trade is, to the prior high. So that structure would have been roughly 340 into 380 at best. So that's in-out spreads, verticals, or other type of call strategies. So it's the same logic. I know we're talking about defense stocks or Northrop Grumman in this example, but that same concept would play into any stock you're looking at, including oil stocks, Exxon Mobil, which is off of support, possibly trading higher, although I'm interested in this pattern, which is a type of consolidation. So even though Exxon Mobil shares are downtrending, they are holding support for the most part at 66, 67, and just under 68 per share. So that could be a little fade trade or a bounce type of maneuver. And CVX, another oil stock, might be in a better position because it is in a clearer sideways trend. So as a swing trader, I know this is a weekly chart, but the bigger picture helps guide our decisions, and those could be shorting the highs, buying the lows, targeting the opposite extreme. Again, swing trading is nothing more fancy than the next direct move in price called a swing. So low to high is a swing, high to low is a swing, low to high, back and forth. And that can be a good type of income generation strategy with in-out spreads, verticals, and the like, despite these news headline events. We'll always be watching those and more, and that's why we like options. If the worst happens, we have a fixed loss point and a fixed gain or reward point. That's the beauty of those spreads. But as always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for January 9th, 2020.